We're watching shares of Coca-Cola edging higher on the day after reporting second quarter earnings. The beverage giant providing some insight into the health of the consumer and where they are spending. With just about 10 minutes left until the closing bell on Wall Street, we're looking at how to navigate the big picture with the Yahoo Finance Playbook. Joining us now is Keith Gangl, Gradient Investments Portfolio Manager. Keith, I know that you're looking at some of these consumer names like a Coca-Cola. It feels like the results, I don't want to say they've been all over the map because we haven't heard from that many of these companies yet, but it does feel like that many of these companies are managing the changing consumer differently right now. What's your take?
Yeah, you're right. I do think it's not all full bore ahead for the consumer names because there's certainly mixed data points. And again, we haven't seen that many. Coke's a good example. Coke had a good pricing and their mix was 9% up. That's very good. If you go back last year, all Coke's EPS growth was from pricing, right? Inflation went up. They passed on the price consumers. Now, the good thing for the consumer side of things, they're not passing it all on price. They're also using volumes actually adding as well. So that's why we like a name like Coke here. But we'll have to wait and see some of these other consumer names. I mean, Costco, that's been a solid report. So that's a good name. And again, we'll have to see. I think the consumer is going to, the high end's probably doing fairly well. And I think the lower end's probably struggling a little bit. So you have to pick and choose your winners there.
And we do have some Magnificent Seven names, Keith, reporting after the bell today. Alphabet, Tesla. You like one of those names as a way to play the consumer. Amazon. How come?
Yeah, we like Amazon a lot. We think, that's a great name. It's got, half of its consumer, half of its tech. Now, when you switch to the two we're reporting tonight, we have Tesla and Alphabet or Google. We think actually, Google's going to put up a good solid number, but we have to wait and see. We think AI is still a big grower for them. Now, when you're talking Amazon, the consumer side of things, they invested quite a bit a couple of years ago into their CapEx, expenses, and that's starting to pay off for them. Margins increasing on the retail side of things, and AWS, they should benefit from AI as well. So again, I think Amazon's a good way of playing not only just the consumer side of things, but the technology name. And again, it's one of those Mag 7 names as well.
And it's interesting, Keith, because overall, there's been this narrative that the lower end consumer, even though the middle income consumer, is rolling over a little bit, making different choices. And yet, if I look at the names of the companies that you've picked, those are ones where perhaps lower income would gravitate. I mean, I'm looking at McDonald's, for example, which just announced it's keeping its value meal around for a little while to cater to that consumer. Do you think that's going to help McDonald's? Because it's been struggling a little bit.
We do. And the reason we like it is, again, I think the low end consumer is struggling. But that being said, the stock's been absolutely punished. And I think the valuation's at the spot now you want to step in. I think a lot of the bad news is behind it. And with this value meal that they're offering, they're going to extend it a little bit. I think you can get that value customer back into it. And also the trade down customer. Maybe that middle end consumer is not going to spend that $15, $20 in another restaurant. And they're going to go back to that value meal. And I think McDonald's is well positioned there as well. They had some problems in the Middle East last couple of quarters. I think that'll be behind them as well. And again, we think for a valuation spot, a lot of that bad news is discounted already into the stock.
How about home improvement, Keith? Is that another way you want to play it?
Sure is. I mean, so with rates coming down, we think, the home builders in general, they can continue to expand. And again, like I said, when Fed starts cutting, which we think they're getting closer to it now, that's going to benefit not only the home builders, but certainly the places that you shop when you're, doing a remodel. When you buy a new house, you're certainly buying things that go into it. And that should benefit a name like Home Depot and also Lowe's as well. Those are a couple of names that we like in the retail side of things.
Keith, what's interesting too as we're talking now is it strikes me that many of these ideas are sort of election agnostic. And I don't know if that's something that you thought about deliberately or that's just sort of a bonus.
Yeah, that's a bonus. And we do think about that as well. Again, we always tell our investor base, keep your political views separate from your investment decisions because, again, you may think one party is going to win and that'll benefit your stocks. But a lot of times that doesn't actually happen. So, again, we want to invest in companies. We don't invest in politicians. And the names that I'm talking about, just like you mentioned, it doesn't really matter who's going to win. We think rates are coming down, so that should benefit your Home Depot, your Lowe's, those type of retailers. We think the consumer has been struggling on the bottom end, but we think a lot of that's priced in. That's why you're going to want to own a name like McDonald's. We're looking forward. We don't want to see what, again, it's been a poor performer, so that's why we want to get into it at these levels.
How about Costco, Keith? Final one there. Why is that a buy?
Costco we like. Now, that's a little bit different than some of the names we've just been talking about. Costco is got the premium valuation, but they're a consistent compound grower. They'll grow double digits. They got, the right consumer base. They got the middle to high-end consumer, and those customers are sticky. We've been long waiting for the Costco to increase their membership. They just recently did that. So the high-end executive members are increasing by $10. That 120 goes to 130. Again, in a big picture of what a consumer spends at Costco, what's $10? The other membership goes up $5 at $60 to $65. We think that's great value. Nice thing about Costco too is they've been passing their savings on to the end customer as well. So a lot of customers, like I mentioned, Coke last year, they were directly passing on the inflation cost to the consumers, whereas Costco's been eating some of that. And I think they'll be well rewarded for doing that.
Final one, Keith, here. Any consumer-facing names, you might have kicked the tires on, Keith, but you decided to pass on recently?
Yeah, so there's all kinds of different names. I mean, there's names that a lot of people like right now. We think is a little expensive. We like to see it a little bit cheaper. There's a name like TJ Maxx. That kind of, fits that mid to lower end consumer or looking for a shop for value. Great concept. Like the story a lot. We think valuation's getting a little bit full, but that's a name. If it does come in here, that's a name we'd like to, look at buying.
All right, Keith, great to have you on the show. Thank you so much for joining us. Appreciate it.
Thanks for having me.